Greetings everyone, my name is Gibson Paul, and today's presentation we'll be discussing about state taxes, but not in just any states. We're going to be talking about California and Colorado state taxes. And of those state taxes consist several different types of taxes, few of which are corporate income tax and personal income tax, where we're going to be talking about the taxable rate that is multiplied around the taxable income earned by a business entity or a individual taxpayer, as well as property taxes, where if you own a building, you have to pay taxes on it at the end of the year. How much is it? Sales tax, where whatever you buy, there's a certain amount of percentage you gotta pay on that item you're buying. And last but not least, franchise tax, or in other words, business privilege tax, where if you're doing business in a state or reside in a state, or maybe the name of it is if you have nexus in a state, you will have to pay a certain type of tax depending on the state. It's usually a flat rate. Now the first one we're going to talk about is Colorado, which is a flat tax rate, which means that whatever you get taxed at, it's going to be the same rate for everyone. And in this case, it is 4.63% for corporate and personal income tax, which means your brother, your sister, your neighbor, down the street, upstairs, downstairs, everyone's getting taxed at the same rate. It's a bit of an equality right there, but is it really fair? We'll find out later. And on your property taxes, the average is 0.69%. But it varies. It varies on each county that the taxpayer may reside in. So you may be paying 0.69% in one county, but in another county, a person may be paying as high as 1.5%. So it truly depends on the county and how they assess their taxes. Next is sales tax. Whatever you buy, it is a flat 2.9%. No way out of it. Seems pretty reasonable. Let's see how California fares. And last but not least, their franchise tax is done. So if you're a business doing business in Colorado, guess what? You don't have to pay a dime for it. Now, let's discuss California, which is a progressive tax rate state. Now, California has income where, depending on your income, if it goes up or down, that determines the rate you get taxed at. And that is what a progressive tax rate state does. They don't do it at a fixed rate like Colorado does. So for personal and corporate income tax, they tax you from anywhere from 1% to 12.3%. And that starts anywhere from $1 to $526,000. So that can jump quite quickly, depending how much money you make in that state or income you generate in that state if you're a business. Now that sounds pretty good depending on the position you may be in. If you're below Colorado's 4.63%, but the more money you make, the more money in taxes you will definitely have to pay. Property taxes is 1%, which is just a little bit higher than Colorado, so it is not a huge difference. But sales tax is more than double, which is crazy. You are definitely paying serious sales tax in California when you're buying things there. And last but not least, their franchise tax. If you're a business entity, you're paying $800 minimum just for doing business or having nexus in California. Now this applies to entities such as S-corps, pass-throughs, proprietorships, and corporations. But if you're a corp, the more is either $800 minimum or your net income times the tax rate. So if, for example, if you make $300,000, you will have to pay $900 in business privilege tax, which is higher than the $800 minimum. So California is definitely making you pay for doing business in their state. But hey, that's a decision taxpayers have to make on a day-to-day basis. In conclusion, tax rates in a progressive or flat rate state can make a huge impact on your decisions of whether you want to reside there or do business there. We gotta do our due diligence and see if we want to be in that state. If we see a business opportunity, is it worth going into that state and dealing with the tax compliance? Because that is going to cost you a pretty penny just for filing your taxes in the state of your choosing. So at the end of the day, you got to pick your poison. If there's a great business opportunity, should you go there? And why? And if you do, how does it affect you? That's the things we have to think about. Now, I want to thank everyone for listening to my presentation. Now, let's have a discussion on what type of things should we be thinking about if we're going to be moving into a certain state. Now, the first question is, what business do you believe would thrive in Colorado far better than California? Kind of makes you think. Why would businesses want to be in California to begin with? Oh, wait, that leads on to the next question. Why should businesses choose California instead of Colorado? And last but not least, which state will be better to reside in based on the tax rates? Let's discuss. I want to hear your thoughts. Thank you for hearing my presentation. Everyone, you have a great day.